Our next guest has had a front row seat to what's happening behind the scenes. Joining us now, Omeed Malik, president, founder of 1789 Capital. It's good to have you on, Omeed. And are you actually, where are you right now? Are you on, is this a Zoom?
This is a Zoom in my office, but yeah, I think you're implying I'm about 5 minutes away from Mar-a-Lago.
About 5 minutes away from Mar-a-Lago. Former Democrat. I think you have a famous employee named DJT Jr. Is that true?
That is true. The junior being the operative word there, not the president, but his son. Yeah. So, but that's just a formality. He and I have been business partners for almost 4 years now, investing in what we call the EIG economy, which stands for Entrepreneurship, Innovation, and Growth. And that's our acronym that stands totally counter to ESG. Right.
And even when a publication tries to describe 1789 or you, they say anti-woke. You comfortable with that?
You're picking up on something pretty important. You know, when we were the loyal opposition, maybe it's okay to have an anti in front of your name, but I think we were validated in our thesis with what happened a few weeks ago. We prefer a much more positive vision, to your point, which is focusing on how to spur innovation. But what we clearly do not support are ESG or DEI policies that we think have destroyed shareholder value, really, which is factual now that you can map that performance out over the last 15 years. We also want to make sure that we're providing choice to customers. And it's all predicated in data, by the way. If you look at 2020 voting patterns, the folks that voted for Biden in 2020 represented 70% of American GDP. And Trump voters were 30% of American GDP. So at first blush, you might say, oh, that's not that great. Well, 30% of American GDP is $7 trillion. That's the third largest economy in the world. And I think it's stipulated that for a long time, corporate America was not only ignoring them, but alienating them. We want to play in those areas. And, you know, you can have an emerging market south of the Mason-Dixon line.
It's all six things, and I'm talking about entrepreneurship, innovation, growth, equity, social, government. It seems like any decent startup or company, by definition, has components of all those things. I guess it's just how you emphasize things where we went awry. I mean, who starts a company that doesn't think about entrepreneurship, innovation, and growth, as well as governance and everything else, Omeed?
It's so much more complicated than that, unfortunately, and you guys have been spending a few years talking to Vivek about it. It starts with the asset management arena. So you have to look at the capital flows that are informing behavior. So you've seen the conduct of public companies. I don't think that Exxon wants to get out of fossil fuels, but they're pressured to do so. That kind of conduct and behavior trickles all the way down to Silicon Valley. You had, until very recently, some of the biggest Silicon Valley firms refusing to invest in any areas of defense tech. That's an area that we have stepped into because their employees, and for whatever reasons, they didn't want to support the U.S. government. At the same time, they were more than comfortable going and investing in China, which is our #1 enemy or adversary, if you will, as well as starting Chinese-only funds where they would receive money from Chinese investors. I try to equate that to someone starting a fund during the Cold War and going over to the Soviet Union and raising capital, but not at the same time investing in America. So that kind of absurdity presented us with the opportunity to fill in over a couple of years ago.